everyone. This is Pamela Lewis. Thank you so much for coming to visit my YouTube channel. If you've been here before, thank you so much for watching. If this is your first time, welcome. So glad you came to visit my YouTube channel. Before you leave, before you finish watching my videos, please hit the subscribe button. And then also hit that button that looks like a bell so you can get notified when I have new videos available. I'll be coming to you each week to talk about something about real estate to help you get prepared to either buy or sell real estate or even rent your home out. So get ready, get your pen, your paper, or even get your phone out in your notes section and get ready because I'm giving you some information. We are going to be discussing no money down loan programs or loan programs that have small down payments. All right, let's get started. So welcome back. Right now we're going to discuss the FHA loan. What is the FHA loan? You may have heard it on the market. An FHA loan is a loan that's insured by the Federal Housing Authority. Now, that's also backed by, also known as HUD, which is the Housing Urban Development. They have a great website with a lot of resources at hud.gov. So, under the HUD program, the FHA loan, you can do as little as 3.5% down. This program is designed for people who have less than stellar credit. Typically, I think 580 is the lowest credit score you can actually have with the FHA loan, but it's all depending on the bank that you use. Every bank sets their own criteria, so make sure you ask that question. So if you remember, or if you haven't seen my other video, check out the steps you want to take in order to prepare for a loan. If you recall that I did note that you should pull your credit report to find out what your 3 credit scores are. Under the FHA loan, you do have what they call mortgage insurance, MIP. So HUD, what they have designed is that you, borrower or buyer, when you pay your mortgage each month, you're going to pay a small fee into this MIP, which is the mortgage insurance, and it's only for the bank to have an assurance that in the event that you foreclose, that they would have a cushion, an amount of money left over, so they can actually recoup some of their fees from you foreclosing. Now, the FHA loan, most people think of it as a first-time home buyer loan, and it is. But really, if you have not owned a home in the last 3 years, you too can benefit from this loan, even if you have used an FHA loan. So, who can do the financing for you for FHA? Most banks can, but you have to ask the question if they do FHA financing. Now, under the FHA financing, the stuff that I really like is there are other programs under this FHA financing. One is called VHDA. That's from the Virginia Housing and Development and Authority. Now, in the Commonwealth of Virginia, we have a loan that is an FHA product called VHDA. Now, VHDA, essentially what they do is they hold that 3.5% down payment as a second loan. Now, the rate typically is slightly higher than what your first interest rate is, and most people get scared like, oh, I don't want an extra loan, and I don't want a higher rate. But you have to think about it. 3.5% of your loan. So if you're buying a house for, let's say, $100,000, just to make it easier, you're saying that the down payment, the second lien, would be $3,500. On a higher rate, most of the time, it's only an additional $25 to $40 for you to be able to have a loan where you put no money down. Now, also under the FHA loan or under HUD, what they have available, if you look at my previous video that I have done, it's called NACA. Now, NACA is backed by HUD, and that's also 100% financing. So those are the best loans that I know that I can tell you about that's available. So you either can do the 3.5% down, or you also have the options for 100% down. 100% financing, which is no money down. So one of the things you have to think about, the less money you put down, also we like to say in real estate, the less skin you put in the game, typically the bank is going to offer you less loan to purchase a house. Because it would seem to be as a higher risk if the less money you put down or the less skin in the game you put down. So those are some things to think about. So if you have available at your discretion to put 3.5% down, you may want to do that versus not putting any money down. I'm a firm believer, and I got raised on the philosophy of check your options. Check your options for doing the VHDA loan or doing the FHA loan. Most lenders who do VHDA, or actually all of them who do VHDA, also do FHA. But not all lenders who offer the FHA loan also offer the VHDA loan. So definitely come talk to me or talk to your realtor if you think that you may want to try to qualify for your VHDA loan. Also, with this loan, since it does have restrictions on the credit score, FHA does allow for the lower credit score, but as you go into 100% financing like the VHDA loan, you do have to have a higher credit score. So that's something also to consider. And also, too, there are income restrictions on these loans for VHDA. Now, NACA, which you look at the previous video, I'll tell you all the pros and cons about that loan. So if you have any questions about the FHA loan, let me know. Again, this is Pamela Lewis with Realty Executives, the broker of Realty Executives, and team lead for Team McKinney.